Welcome to Fintech Chatter News, presented by Tier 1 People, leaders in Fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Well, welcome back to Fintech Chatter News. I'm your host, Dexter Cousins.
Carolyn Breeze.
That's right, I'm joined by Carolyn Breeze, CEO of Aus Fintechs. Carolyn, great to see you. Thanks for coming and joining me today on Fintech News.
Thanks for having me.
Tell us a little bit about Aus Fintechs.
Yeah, Scalare Partners is a VC firm or an investment firm focused on tech companies that are very early stage. So if you think about the market more broadly for investment, there's a lot of startup bootcamp type scenarios, and then you've got your typical VCs that are writing, $1, $2, $5, $10 million checks. And there's a real gap in that seed funding rate, like rounds for those smaller startups who are still scaling, and that's the problem that Scalare solves. So they usually write the first or second check in a seed round, but the model is that they partner really closely with the tech company and organisation and give them access to all of the benefits of the Scalare community and the scaling programs to help them grow, and they stick with them and see them through.
Now, a lot for us to talk about today, but to give some context, Fintech Leader of the Year, eBay, Braintree, Go Cordless, Zepto. I mean, you've worked with some of the biggest fintech in the world. A kind of authority on payments, which we're going to talk a lot about today. But before we do that, look, the other side to it is kind of SVB, and whilst it's in the US, certainly, we're hearing of impacts here for Aussie Fintechs. What's kind of your take on what's happened over the weekend, Carl?
Yeah, it's interesting. It's that old saying, when the US gets a cold, Australia has a sneeze.
Yeah.
And there are a lot of ambitious fintechs. We're very proud of those that have grown to international markets, and the US is a flagship one of those. So it's inevitable that a bank that supports early stage tech startups, and particularly fintech, if something was to happen there, that it would have a bit of a ripple effect over here. And I know that there are some Australian fintechs that have been affected. I think one of the things that made Silicon Valley Bank a great partner for fintech startups is that they removed a lot of the barriers to entry. So if you were looking to get boots on the ground and scale over time, you could use a bank like Silicon Valley Bank to access their licenses and use another partner and not have to go and get your own, and have that support to scale. And that meant that they had a very early stage base of clients. And unfortunately, they're the ones that can't afford a hit like this. Yeah. So it's really unfortunate. But it's also it reminded me a little bit of the recent crypto scenario, in that it was also almost self-prophecy. Once people got wind that there was an issue, they went in and started withdrawing their funds, and then ultimately, that's the outcome. So I feel for the Australian fintechs that have some funds in there. I'm hoping that it wasn't, more than 250k, whatever that threshold is. But I know that the Australian community will be getting behind them and the founders themselves. And I think off the back of the year or two we've had, particularly in the funding market, so again, they're the same fintechs that would have been involved in SVB. I think it's just important for us as a community also to think about the founders' mental health and wellness. Absolutely. And make that the priority.
Yeah, I'm sure that all the armchair critics will be out kind of dissecting what's happened, and it's just it's not needed right now.
No,
right?
I even saw a couple of posts over the weekend on LinkedIn of people saying almost like "I told you so," who I've never heard mention Silicon Valley Bank before. Like all of a sudden you knew what was going to happen. Yeah, I doubt you did.
Yeah. Look, it is a shame, right? Because it seemed like a very solvable problem on Wednesday last week.
Yeah.
And it's and that's, I guess, another thing that's really kind of, I think it's highlighted a massive issue of the how quickly technology has evolved. Is one, I think it's the first bank run we've ever seen fueled by Twitter. Yeah. And two, I think, and it's something that I think people need to understand about the Australian banking market, right? Is that there are caps on what you can take out and daily limits, right? Yeah. Whereas in the US, that just people are just withdrawing everything, right?
Exactly. So, and one thing I think that there might be a knock-on effect of is unlike the Australian market, in the US, it's very transparent when you're working with merchants who your acquiring or sponsor bank partner is.
Yeah.
They make that really transparent, whereas here it's not really talked about unless they really need to know, because it's all front-ended. And over there in that market, I remember when we were at Go Cardless and we were launching into the market, enterprise was a big focus for us. Those enterprise entities want to make sure that the bank supporting the fintech is of enterprise quality, somewhere where they would bank themselves. And it's a shame because now what's happened with Silicon Valley Bank, I think we'll have a bit of an echo throughout the market.
Yeah.
They'll be even more cautious of acquiring and sponsor bank partners, which I think will make the entry even harder for fintechs.
Yeah. Now, as I was putting together the kind of run through of the show last week, I think I sent you the first draft on Thursday last week, and I've made another 4 drafts since then because it's just been news after news after news, and it's not been a little PR piece, it's been really significant stuff.
Yeah.
So I want to kind of shift the conversation onto something really positive, which was something announced on Friday, and that was Basiq being acquired by Cuscal.
Good news.
Yeah.
I really love the Basiq team and Demir, and they actually did a partnership with Zepto around a payments piece, and I got to know the business quite well.
Yeah.
We used to work very well together, and it couldn't have happened to a nicer bunch of people.
Yeah.
And it makes a lot of sense for Cuscal as well. It gives them entry into that part of the market that is a little bit smaller than they would normally bite into.
Yeah.
It gives them access to that data and categorization of data and how they use that to make decisions, and give that access to all of the other merchants and clients that are using them. But something that really resonated for me in the model is that Demir has always said that Basiq is data-driven payments.
Yeah.
So the data is actually driving the payment initiation and the conversion of the payment, in the context of the everyday activity of the end consumer. And I love that when we think about where we'll be in 2 to 3 years' time, where we'll be making micro buying decisions in context. Those data-driven decision-making tools are there, and the open data and open banking is key. And so it's a perfect marriage because Cuscal have all of the payment acquiring technology, but they don't have that data-driven piece. And so it's just, it's really, really clever. And I can't congratulate Demir enough. I sent him a text when I saw it. It's just fantastic.
And I hope the price that he got is enough to pass on to his 6 kids as well.
At least have a holiday, Demir. His man has not stopped working for years.
And also, look, on the flip side, I've got Bianca Bates from Cuscal coming on the show in a couple of weeks.
Excellent.
And really great operator. And I think what really struck me when I first started working with Cuscal a few years back was just, I'd always thought of them as this outsourced provider to credit unions. And the kind of history of innovation within that business is it's quite startling, actually, when you kind of look beneath the hood.
They were the first to do a lot of things, and they don't, you don't hear about that as much until you talk to, Bianca or Nathan or Kieran or someone, and they talk you through some of the first to markets they delivered, and it's pretty out there. And they enable so much of the market.
Yeah.
And it's interesting because they were very clever a few years ago when the big banks started to unbank a lot of the acquirers and processors and PayFacs, and Cuscal had quite the right, I think, risk appetite at that moment to capitalise on the market. And then they've used that momentum to build, what is there today. And I just, it was fantastic.
In light of what happened at the weekend as well, kind of, hopefully this is a kind of a launch pad for fintech startups to get ideas off the ground with a setup that's a little bit more kind of founder friendly as well.
100%. And I think Basiq have done a really good job. Dara and the team of setting up the startup and kind of tech startup bootcampy stuff within Basiq and giving access to the tools in the sandbox and allowing people to jump in and create these use cases. And again, that's a perfect playing field for Cuscal to get more involved in that part of the market. So it's perfect.
Now, sticking with the payments theme, we also there was another massive announcement: 70 million.
It's a huge raise
in this environment. From Till Payments. What did you make of that?
Look, first of all, congratulations obviously to the guys. That is an epic raise. There's been some really great raise stories and success stories since coming into the new year. So despite the market, obviously people are still investing. And they're just looking at investing in those businesses in a different way. So it's not about the growth anymore. That's one part of it, but probably third, it's more around the actual revenue and the run rate and the go-to-market piece. And I know there's been, I have seen a lot of commentary on LinkedIn and from the market around Till's valuation and the changes they made to the business prior to going into the raise. And, the amount that was raised and the dilution, those kinds of things. And at the end of the day, what we need to remember is they kept the business alive.
Yeah.
And sometimes you have to make those tough decisions. They did wait till after Christmas as well. They did, I think they did things in a really thoughtful way and caring way. But at the end of the day, they needed to show the investment market that the business comes first.
Yeah.
They need to keep that business alive, that it does have potential, that the work has been put in. And to do that, they had to make changes.
Yeah.
And they also had to, raise more against that value, a lower value than they probably wanted to or would have done 18 months ago. But all of that being said, the message we need to take from it is there is still money in the market for the right business, and founders are willing to make the changes to have their businesses survive, and that's exactly what Till have done.
Yeah, and look, it's kind of one of those tough things, right? I remember, would have been 3 years ago, and I think Shadi was the guest on before you, right?
Yeah.
Which I think was like episode 15 or something like that. And at the time there were 30 people. And then Shadi came on the show again a year and a half later, and there were 300 people. And it's just incredible, right? The growth. And I think, unfortunately, that was maybe the end of 2021.
Yes.
The headwinds that have faced, the whole sector since then. I mean, you look at buy now, pay later, and how some of those businesses are still going. It just absolutely amazes me, and the resilience, kind of ingenuity and problem solving that these founders must be doing on an almost like second basis. Is just incredible. And
I know it sounds difficult to do, but when the business went from 30 to 300, we would have celebrated the growth, thought, wow, they're doing really well. I wonder what they're going to do next. 300 staff, watch this space. We almost need to be as supportive as an industry and empathetic when the opposite happens.
Yeah.
Like when they do lose people, instead of, regurgitating the article on LinkedIn and like, XYZ people cut from Till, like, it's a hard time.
Yeah.
No one does that and enjoys it. That's a tough thing to go through, and I think we need to give the same level of support and go, it's tough over there. Obviously, they've got significant plans and opportunities they need to stick to, and they need to lean down their business in order to survive, and we need to give them that support.
Yeah. Now, there was another big bit of news last week, and I'm not one to kind of talk about redundancies, but I felt I had to with this, and that was the Xero shedding 800 jobs, and in the same week, not connected with fintech, but still really significant. Atlassian announcing 500 job cuts. I mean, Atlassian has been so vocal about actually hiring people, and I think what this shows and showed to me was, look, this is kind of serious now. I think what we'd seen up to that point was mainly kind of startups who you could have questioned a lot of them. Hey, well, were they going to be around anyway? And now what we're seeing is significant businesses. I mean, Xero, the biggest tech business to come out of New Zealand. Atlassian, the biggest tech business to come out of Oz, having to make significant job cuts, right? And I think the harsh reality is that the economic times that we're in, these are just the decisions that have to be made, and as much as it's painful, it has to happen.
It affects businesses of all shapes and sizes, and I think when you see those big numbers in the press, 800 from Xero and 500 from Atlassian, they're big numbers, but in context with their global headcount, it's the same as a local fintech shedding 25% or 15% or 10%. And so we need to kind of keep that in context. And the other thing is, for a lot of those big companies, just like small ones, they need to be agile and pivot and be seen to be doing the right things in order to maintain value and grow and potentially, share price as well with investment. And so they need to they're not immune to it. They need to make the same decisions. And both had gone through significant growth and headcount growth in the last couple of years. And so it could be more of a resetting as to back to where they were. It could be also tied to certain strategy or changes within their, what they're actually doing as a business. I mean, it's easy for us to attach it to the macro market and take it as a worry, but in the context and the scheme of it, I don't think it is.
Yeah, and look, I was actually on Aus Biz TV and I said exactly the same thing. And if you look at you unpack, the Xero and the Atlassian announcements, these are part of strategic reviews. And the reality is, and this happened, 2008, 2009, 2010, every business was forced to look at, what's our core business? What do we do really well? And if you look at the last few years, there's been a lot of kind of divestment. There's been a lot of, let's go and dip our toe into, and innovate. And unfortunately, some of those bets aren't going to come off. I think what was really interesting was, kind of footnote on the Xero announcement was an investment that they'd made, or acquisition of Waddle.
Oh, that's right.
Yeah, and they've decided to kind of take a loss on that. And so I think this is just the reality, right, of the environment that we're in, is that some of those bets now are kind of, they've not paid off, and you just have to cut the cord, right, and move on.
You just got to cut the fat. Yeah, I saw that this week, and it honestly feels like yesterday that we were at Intersect in Melbourne it was 2 years ago. I had to really work it out when Waddle were being just feels like it just happened. So it's a shame, but they're the decisions that they have to make, and if they were letting headcount go and not making those decisions, you'd question that as well. So it is what it is. I don't think that actually we should take anything by that as regards to like other acquisitions and mergers and things happening in the market. It's just a decision that they had to make in the time that we're in.
Now, we've talked about there still being money around, and it seems to be, and I certainly don't want to kind of claim to be some sort of oracle, but it was really clear at Intersect last year that there were these kind of three areas where there seemed to be big opportunities still to be found. One of them was, I guess, not just business banking, but that whole kind of accounting tax side. We've seen Henry raise 35 million this year. Another of them is the merger or the kind of convergence between payments and blockchain. And we've talked about Till, but also Datamesh this year announced just a couple of weeks back, I think, a 35 mil raise. We then, I guess, had the announcement from the RBA of the pilots around CBDC, and we're going to have a really cool kind of podcast coming up this week as well that I recorded just recently with one of those pilot schemes. And I'm really excited about it. And I think the reason why is that all the use cases, they're all things that I was thinking, over the last 10 years, why is the government not kind of, GST, like it's just a perfect use case for program GST into transactions. So what's your thoughts on I guess, first of all, the Datamesh raise, and then kind of, this convergence between payments and blockchain?
Datamesh is super exciting. Mark's done a brilliant job, and it's interesting because they're one of those organisations that you don't hear much about. And unless you're in our industry, you probably haven't heard of them at all. They're not a consumer-facing brand. They're like a layer of payment technology. But they're not in the press a lot. They're not on stage a lot, and so they've grown a very scalable, deliberate business. And their expansion internationally has been very purposeful, and I think and the raise is apt for where they're at and their value. So that's a really exciting business. But I love that they're kind of no one's really heard much about them unless you're thick in the weeds. That's what I like about that one. And then moving on, tying into the CBDC pilot, very close to my heart. So in my last few months at Zepto, I had the opportunity to represent Zepto at a few of the roundtables that Steve Ellis and the team had set up with the RBA, and to meet all the other parties that were interested in putting use case forward. And I think even having the pilot and opening it up to the market like that, it's such a huge opportunity. And I had a look at the list of the people that were accepted, or the companies accepted in the use cases last week, and it just filled me with pride. There were so many familiar names on that list, and I'm so excited. And the other thing I love about it is it'd be very easy to tie it just to payments or financial, institutions and use cases. But there's a couple in there that are kind of bordering in other verticals. So, for example, the guys at Not Centralised have put one in for the construction industry, where they're going to use blockchain almost like a smart contract type scenario, where the money is secure and it's paid out to the different vendors in that, contract at certain milestones being met. It's easier for the banks to lend against. It's easier for people to know when their money is coming. There's no, qualms about it or uncertainty at all. And I think that's a fantastic use case to tie back to something stable.
Yeah.
And I think it's about time. And I saw something the other day on LinkedIn. I think it was Richard mentioned something around, 3 to 5 years. And I said, I think that's like almost 2 to 4 years too long.
Yeah.
I'd love to see us getting out sooner than that, because Caroline Bowler made a really good point at the last roundtable that Steve pulled together, where she said, if we launch too late, we risk ending up in this situation of soft power like we have now with the US, where the dollar dominates. And we've already got people very close to home like China that have launched their own stable coin in other markets. If we leave it too long, we're always just going to be this rounding out. Like, we need to get moving. I think we all agree it needs to happen. I think the use cases are going to help prop that up, but I don't know if we've got 3 to 5 years.
Yeah.
And I think the other point is XeroCap have done a great job of setting one up already. And if we wait, there'll be fantastic companies out there like that setting up stablecoins that will start to dominate. And then if we do try and release our own stablecoin, we're almost competing asset-wise amongst ourselves. Like, there's only so much in Australia that we can stabilise it against. So I think we need to get really unified.
Yeah. I mean, if you look at the issues just that we've had with superannuation, right, over the last decade, and struggling to find assets, right, to put the money into.
Yeah.
So
I think that's something people don't think about, is that it's got to tie to an asset.
Yeah.
And so, already we'd be not competing, but that kind of soft power piece with the US and China. Like, we can't leave it much longer. We need to get moving. But I love some of the use cases that have been put forward, and I'm looking forward to seeing it through. I'm trying to get involved wherever I can to try and give people a hand, just so I can stay close to it, because I love it so much.